Turkey's central bank has lifted a key interest rate. It's trying to cool off a rapid rise in consumer prices and stabilize its currency, the lira. It's the first increase since last December, and it was bigger than economists had expected. The bank lifted the highest of its four interest rates that it uses to set policy by 3/4 of a percentage point. The late liquidity window rate now stands at 13.5%. This is the rate the central bank charges commercial banks to keep their excess money. The lira weakened on the news to 4.1 against the dollar. It's lost more than 7% this year to reach record lows. Turkey's inflation rate stood at a little over 10% year-on-year last month. The government is reportedly working on a program to lower inflation and interest rates to single digits. Taha Arvas joins us here in the studio. He's a financial columnist at the Daily Sabah newspaper. Taha, great to have you on the show, as always. Look, what is the central bank trying to achieve here by raising interest rates?
Well, as you said in the intro, there's a problem with inflation. There's a lot of uncertainty in Turkey's neighborhood that it's in right now. So what it's trying to do is keep inflation from skyrocketing, frankly, because the growth rate is so high, as you may have mentioned. Turkey's growth rate was 7% last year, which is the highest among all OECD countries. And so when you have an economy that's doing so well as far as growth, you have to make sure to keep inflation low. And so that's the move with the interest rates today.
Yeah, certainly growth has not been a problem in the Turkey story at all. But look, some economists had been calling for an even more aggressive tightening. Will this rate move of 75 basis points be enough to achieve what the central bank is trying to do, which is to bring inflation back down to single digits?
You know, I think a lot of the components about regarding the currency exchange rate is out of our hands, out of Turkey's hands, frankly, now, because we were discussing earlier how Turkey is both very much energy dependent, and how today, for example, it was the 3-month record high for the dollar index. So it was today's moves in the Turkish lira and the dollar weren't as much a factor of the Turkish lira, the interest rates being hiked. Rather, it was the dollar strengthening. Because
dollar strength rather than lira weakness.
Exactly. Because all the other emerging markets did much worse than Turkey did today as far as exchange rates. But you have to consider wherever the dollar moves, it will affect everyone, including Turkey's lira.
And just talking about the dollar, I mean, it certainly looks for the near term, at least, that the dollar is going to keep on strengthening.
That's correct, right.
I mean, with the yield on the 10-year Treasury going over 3%.
Right.
And,
so, I mean, the new Federal Reserve Chairman has signaled that they will be increasing the federal funds rate for at least the next 5 meetings. That means we're going to hit 3% in the federal funds rate by the end of next year. That's double what it is now. That's a 100% increase in what you get for your dollar deposits at a bank around the world. So other countries have to compete with that, including Turkey, including other emerging markets. If they want to attract investors, they have to give a higher rate of interest. But at some point, you get to diminishing returns. You can't keep increasing your interest rate because that stagnates growth in the country. You know, if you're selling something, you can't sell it at 300% profit and hope to make money if you're paying so much in interest rates as it is.
That is, of course, something that President Recep Tayyip Erdogan doesn't quite agree with.
Right.
And there are elections coming up earlier than expected in June. How are the upcoming elections affecting the expectations for the lira, interest rates, and inflation and growth? There's a lot in that question to unpack.
Let's start with the first part. The first part is the president wants, he answers to the people. There's an election coming up in 60 days. If the economy is good, if people are happy with what's in their pocket, they will vote for the president. If they're not, they won't. The economy is always a driving factor in most elections. So what we have here is he answers to the people, but the central bank doesn't answer to the people, frankly. It's independent. It answers to its own long-term goals. So it may think, yes, in the short term, in the long term, it might be great to increase interest rates, but the two timelines may not mesh necessarily. So to make a long story short, the president would like to see lower interest rates in the future, and the central bank needs to address some problems now.
Yeah, I mean, the goal that it's the stated goal of the central bank is price stability.
Right.
Isn't it?
Exactly.
And I mean, to that end, Does it keep on raising interest rates despite what else is going on?
I don't think it can, and there's several reasons. Because the price of energy, of crude oil, has increased by over 100% in the last 3 years. There's a war on Turkey's south in Syria. There's problems in the north with Ukraine and Crimea. There's problems in the east. These problems need to be solved. Solving any one of these problems will do more for Turkey's lira and for the country as a whole than any interest rate hike the central bank can do. The central bank and interest rate hikes are not a panacea. It won't solve everything.
Yeah.
So I think the sooner politicians realize that, and I'm sure a lot of politicians do, and take steps to address those other problems, the sooner that Turkey can get out of this perfect storm, unfortunately, that it's in.
Well, you're right, but at the same time, and there are some bright spots on the horizon, aren't there? I mean, we look at tourism, for example.
Right.
That seems to be rebounding very nicely.
Right.
Thomas Cook, the British tour operator, was saying that British tourists are coming back.
Yeah,
quite
up
strongly.
nearly 90% year over year,
Yeah.
and a lot of other neighbors, the Russians, etc., Europeans, Germans are said to be coming back because they get so much more bang for their buck, or bang for their euro now, because of the problem with the depreciation in the lira. So it's a mixed blessing, and with all this foreign reserve coming in the future, maybe it'll balance things out, and maybe the lira will come back to where it was.
Very finally, expectations from economists for inflation for the rest of the year? Rough ballpark figure?
I think 7 or 8% would be good for the economy, and I think we'll probably hit probably 7 or 8% by the end of the year. I think because I expect energy prices to go down before the end of the year, and with that happening, then those inflationary pressures will abate a little.
Okay, Taha Arvas from the Daily Sabah. Thank you so much.
Thank you.